Hey everybody, Smart Silver Stacker here. Hope you're doing well. So it's been a real roller coaster ride in the price of silver past couple of days. Yesterday we had a pretty sharp rally actually in the price of silver, and then today it's followed by an even more brutal smackdown. We've got the price of silver today down over 6%, down well under 30 bucks at 29.39 as we speak. So let's talk about this smackdown. Is it an overreaction? What does it mean for silver? What does it mean for stackers? If you ask me, it is an overreaction. And I think you'll probably agree when we examine the news that is driving this. Yeah, Art Joe Go in the chat there says, silver is on sale. That's all. Yeah, that's a pretty good summation of it. Let's put this into context, okay? Let's zoom this chart out to the year-to-date chart, and you can see silver's still up more than 22% year-to-date. So the rally is still on, right? But I've said it many times, it's going to be a volatile ride on the way to new all-time highs in silver, and today is a great example of that. Same story in gold, by the way. Gold down to around 2,300 right now, hanging tight above that. And let's take a look at the charts just to kind of put this into context. You can see gold is in the midst of a breakout from a long-term cup and handle formation. This breakout is still, very much intact. You've got some bouncing around between the all-time highs now around 2450 and this level here right around 2275. We're not down to the bottom of this yet, but you see a nice flag forming in gold, likely a continuation pattern. So we're toward the bottom end of that. Probably a good time to add to your gold positions as well. Similar story in silver. We got this critical breakout above the $26 level, which had served as resistance for some time. We broke through it back in April, retested it, bounced off. And of course, it's going to be a bumpy ride, right, on the way up. Again, silver's a very volatile market. If you're a trader, if you can time things right, you probably love silver for that reason. But today, I think, is a great time to be adding to your physical positions. Of course, if you want to do that, check out today's video sponsor, SD Bullion. Junk silver now under $22 per $1 face coins. They've got a sale going on buffaloes. You can get a buffalo for under 2,400 bucks now, any quantity pricing. So I think those are both great opportunities for stackers. Not financial advice, of course. Let's talk about what's driving this. So there were really two primary factors driving the sell-off in the precious metals today. Art Joko again says, silver's not for the faint of heart. That's true. That's true. If you don't like seeing the numbers, move violently up and down, then it's probably not the asset for you. But with the potential for these big sell-offs comes the potential for significant gains. And what was driving this sell-off was that overnight, gold took a hit when it was revealed that China had not purchased gold in the month of May. Now, they've been buying gold up. Many of these BRICS nation central banks have been accumulating gold at a very rapid pace, and China apparently didn't buy any gold in May. Now, that actually, if you think about it, is kind of a bullish sign for gold in the long term, just because gold was hitting new all-time highs in May, and it was doing that without any Chinese purchasing. But I guess markets, the algorithmic traders, they saw this as a negative for gold, at least in the short term, sold off. And then also we got the jobs report today. We got a quote-unquote strong jobs report, which it's presumably strong economic data. We'll talk about that in just a moment, why these job numbers are really not all they're cracked up to be. But the headline number for the non-farm payroll report was that we added 272,000 jobs versus 185,000 forecasts. So, strong U.S. economy is the narrative. Algorithmic traders, some market participants viewing this as a sign that the Federal Reserve is not going to be cutting rates as soon as we might have otherwise thought due to the strength in the economy, and therefore silver selling off. So double whammy. Great time to be buying silver when it drops like this, especially on this news. Zero Hedge did a pretty good summary of this inside the most ridiculous job report in years, and there's just a few parts I want to kind of draw your attention to here. I'm not really too much of a data wonk when it comes to delving into the depths of the jobs reports and things, because really, I mean, it's pointless, I think, It's very likely these government establishment surveys of employment are all faked anyway to paint a much rosier picture than what is the reality out there. But one thing is this chart here, which shows the difference between the household survey and the establishment survey, which used to move more or less in lockstep, but that has diverted sharply since around 2021, and now there's a huge gap between these two measures of employment, and it's likely that the household survey is actually painting the more accurate picture of what's going on in the economy. For example, the household survey is the survey of the jobs that will not count an individual more than once. The establishment survey, if you hold multiple part-time jobs, each one of those gets factored in. Not so with the household job, just one example. And they have a quote here from Bloomberg's chief economist, Anna Wong, who said, May's job report presents contradictory views of the labor market as we expected. The establishment survey shows robust gains in non-farm payrolls, yet the unemployment rate rose to 4%. We believe the latter currently offers a closer approximation of reality than payrolls, as the BLS model for estimating business births and deaths, which added 231,000 jobs to the non-farm payroll print in May, is lagging the reality of surging establishment closures and falling business formation. We think the underlying pace of current job gains is likely less than 100,000 per month. So 231,000 of the jobs that were in this blowout jobs report were just the result of the BLS birth-death model. So like old businesses are closing, new businesses are being added. They come up with some way to model that with an algorithm. It's not like they actually have records of these jobs. This is all just modeled. And so, I mean, obviously they can tweak those numbers. They can tweak that model any way they want. And yet the headlines drive action in this market. And so, when you see silver selling off because of a fake jobs report, well, that gives you an opportunity to get long to physical, tangible assets at a discount, right? So, I mean, really, as long as you're not all levered up and you're managing things, responsibly, this is just an opportunity to get more silver for your fiat. The birth-death model has added 1.9 million jobs since last April. It's a whopping 56% of all payrolls added during this period. So, again, I mean, these numbers are just fake, right? To the extent that jobs are growing, it's likely individuals being forced to take additional part-time jobs. That's not a sign of a strong economy. It's a sign of a consumer who is suffering at the hands of inflation and having to take part-time work. But again, most of these are just based on this birth-death model, which even the Bloomberg chief economist says is way out of whack with reality. Yesterday, we did have this news. The ECB cut interest rates for the first time since 2019. I think this was part of what stoked the rally that we saw in silver yesterday. And yet this being completely disregarded now, even though we've got the Bank of Canada now cutting rates, the Bank of the European Central Bank cutting rates, folks think that the Fed is going to let rates, remain higher for longer because of this good jobs report. Now, you can kind of take these both ways, right? These rate cuts that we're seeing from other G7 central banks. John Lee, who I've had on the channel before, had an interesting tweet where he said this is a decoy move to boost the dollar. And certainly to the extent that, the Canadian dollar gets weakened, the euro gets weakened, that is a positive for the dollar. But also, you got to keep in mind there's a lot of problems in the U.S. economy, right? Like, for example, Moody's today put several U.S. regional banks on downgrade review over their commercial real estate concerns. Only way to fix the commercial real estate crisis is to cut rates, right? For the Federal Reserve to get in there, cut rates, stimulate things, bring the price down, the interest rate on commercial mortgages. And we have a crisis brewing in the regional banks as a result of rising mortgages. We talked the other day about how the FDIC says that unrealized losses in the regional banks now exceed $500 billion, largely due to unrealized losses on residential mortgages. So, all of these problems ultimately are going to result in the Federal Reserve being forced to cut rates. Now, I have a suspicion that we may actually see a surprise rate cut from the Federal Reserve in July. The reason I say that is just the political situation. I mean, the Fed claims to not be political, but I think they are going to try to boost this economy before the election by easing. And I think it makes more sense for them to cut in July than in September, just by virtue of the fact that it's going to be a little obvious if they do it in September, right? They need to kind of get the cut in there. They can't be doing it right before the election. So I have a sneaking suspicion that we may actually see a rate cut by the Federal Reserve in July, but that's not what markets are pricing in at the moment. We'll see how that plays out. I don't have a crystal ball, so we'll see. On that note, there are some important economic points coming up next week, which will likely have a much bigger impact on where the price of gold and silver head than this jobs report, at least in the medium to long term. Wednesday, we have the Consumer Price Index coming out for May, and we also have the FOMC wrapping up their June meeting. So expect next week to be interesting, to say the least. And from a technical standpoint, at least, I think that the picture for gold and silver is looking pretty positive. So here's the chart for silver. Here's the chart for gold. I want to show you a quick chart here from strike.money regarding flag patterns, right? So this is a continuation pattern. This is what it looks like. If it's in the midst of an uptrend, this is a bullish continuation pattern. If you see a flag forming in a downtrend, that's a bearish continuation pattern. But what we see forming right now in gold and silver is a bullish continuation pattern in the form of a flag. We're kind of at the bottom end of it now for silver. So I guess if 29 doesn't hold, I mentioned in the last live stream I did that we may actually even see the price of silver fall to 26 bucks. But if it kind of holds where it is and it bounces off of this downward trend line here of the flag, we could be just wrapping up this consolidation, this continuation. Certainly the fundamental picture in terms of supply and demand, in terms of fiat money creation, in terms of inflationary deficits, all of that is in favor of silver here, not to mention the geopolitical situation that is unfolding before our eyes as we head towards greater World War III in Ukraine and in the South China Sea. Plenty of geopolitical conflict at the moment to drive the metals higher, but today, the domestic fake economic reports seem to have outweighed all of that. And you can kind of see we have a flag forming in gold here as well. So nothing at this point shouts, massive sell-off, massive correction. In fact, even if gold were to sell off, say, down to the $2,000 level or the $2,080 level, which is where the real breakout occurred from, that's, the long-term resistance that has turned support. Now, let me be clear, if gold does drop down to that level, if silver drops down to, say, the $26 level where it broke out of, for me personally, that will be back the truck up, loaded up, all in kind of time. I don't know about you. It's not financial advice. I'm not just really suggesting that anybody do that. But for me, I will be, converting more fiat into physical. For now, I'm kind of, I don't know, holding tight here. I think we need to see how this goes. But look, if you don't have an allocation to physical metal, if you've been looking for a pullback to buy into, I think this is probably a good one here. And it's very possible that this sell-off may not go much further. Again, nobody can time these things perfectly. A lot of people behave as if they can, but even if someone has timed, the breakout and the rallies recently to a T, it doesn't mean anything about their future performance. You got to do your own due diligence here. But look, one thing's for sure. When it comes to buying silver, I prefer to buy it on days when it is dropping versus days when it is in the green. Let me know in the comments down below if you agree. Let me know if you think this sell-off is an overreaction or if it's just the beginning of a broader sell-off. Always love to hear what you have to say. Stay safe and happy stacking, everybody.